Hey, welcome to another episode of Ohio Valley Bank Common Sense. Today I'm going to be filling in for Brad Bapst and my colleague and I, Ryan Mapes. We're going to be talking with Kathy Brammer. She's a loan officer with the Ohio Valley Bank about first-time buyers. So stay tuned. Hey, welcome to another episode of Ohio Valley Bank Common Sense. It's always a pleasure, Ryan, to fill in for Brad. It's my understanding that we're going to be talking about something that's really of interest to many individuals, especially those that are looking for first-time buying of homes.
Oh yeah, and it's always a pleasure to have you on the show too. We're glad you're here and glad you're able to fill in.
Well, thank you. I remember 50 years ago, 45, 50 years ago, buying my first home, and it was scary.
Mine wasn't quite that long ago, but I can remember that. Yeah, about 20 years ago.
Because there was always a lot of concern about, can I make the payments?
Mm-hmm.
And but we have been taught that buying a home is one of those dreams, American dreams. It establishes financial stability. It makes you a part of the community. Mm-hmm. It gives you a sense of pride.
Good way to build assets.
Yes. Yeah. Yes. And we have a lot of different questions that we would like to ask, and so let's introduce our guest today.
Sure. Well, as Pat mentioned, we do have Kathy Brammer with us with the Ohio Valley Bank, loan officer, and she's here to give us some important information about buying homes, talk about mortgages and those kinds of things. So, Kathy, if you could tell us a little bit about yourself and what you do at the bank.
Sure. Thank you for having me. I'm excited to be with you guys today. I am a consumer lender, and that just means I take care of auto loans and mortgage loans, ACE lines, which is our additional college expense credit lines, unsecured loans and personal loans, pretty much anything on the consumer side of the bank.
Okay. And how long have you been with the bank?
I've been with the bank for a total of 7 years.
We talked about how you kind of got to where you are and
Right.
started at the bank and then worked through some things and now a loan officer. So
Right.
Yeah.
So I started at the bank right out of high school and worked at the bank for 2 years. And then I got married and I had my son and stayed at home for about 13 years and then came back to work as a loan clerk about 7 years ago. And then that turned into a lender and then a loan officer at the Holzer Banking Center.
Okay.
Kathy, buying your first home, for me it was a very scary process. And I know that it can be an overwhelming experience for just about anyone that's buying something that's a major, they say that homes are the most expensive of all the things that we're going to invest in.
Right. Yes, it can be very scary and very intimidating, and you don't know what you don't know. Mm-hmm. And so that's why it's really important, and I would recommend that you get in contact with a really knowledgeable lender and a knowledgeable real estate agent so that they can kind of guide you in that first purchase.
Because there are programs available for first-time home buyers.
Correct.
And a lot of programs that probably didn't exist 20 years ago, and I know they didn't exist 40 years ago.
Yeah, that's very, very true. Yeah.
So, could you talk a little bit about maybe what some of those programs are and how it's maybe not as intimidating? Of course, it's going to be intimidating, but there's more options today that are available for first-time home buyers.
There are, and so one of those options would be at Ohio Valley Bank. We have several 100% financing options for customers who maybe don't have a large down payment saved. So one of those would be our Rent Buster. And so the Rent Buster we can offer up to 100% financing on, so as little as no down payment. There are some requirements that go along with that. You have to have some, established credit. You have to have good credit. There's some limitations on the type of housing. It can't be manufactured housing, but just a stick-built home. But you can do up to 100% financing on those.
Well, I know that we were required to put a down payment, and but one of the first things that they looked at was the credit. And I know that first-time buyers, sometimes have not established a good enough credit, and so what are some things that the listener should be aware about, when it requires credit for buying a home?
Okay, so yes, there are options these days for folks that struggle with past credit issues. However, I would suggest to you, even though there are options out there, if you have really bad credit, you're going to pay higher rates, and it's going to cost you a whole lot more if you move forward with that low credit score. So what I would recommend is that you really go to annualcreditreport.com and look at your credit and see what's on it. I've had many customers through the years who they don't even realize they have medical collections, and it can be something lower than $50 as a collection. It can be old cell phone bills or old cable bills, something that they've forgotten that they even had. And it can be as simple as paying off those collections, and those things can really increase your credit score. Of course, the higher your credit score, the lower your interest rate, and the more favorable loan terms you're going to get.
Just out of curiosity, are there certain kinds of credit scores that would not be considered for first-time buyers?
So,
or is it dependent upon set of circumstances?
It depends upon who you're looking at. There are finance companies, and there are mortgage brokers. There's different options. As far as the bank is concerned, we like to see credit scores of at least 650.
Okay, all right.
And 650, as we were talking before the show, I worked at a bank a while back, but lenders really look at what's in the credit report as well,
Right.
not just the score.
Correct.
For example, I think, I had a college student come in to buy a loan or buy a vehicle, applied for that, pulled the credit. I think they had one credit card and their credit score was 700.
Right.
Had a couple that had been very stable over 30 years. I think they might have had 2 or 3 medical collections or a cell phone bill, whatever it was, but it was a very small amount. Their credit score, they were like 660.
Correct.
All because of that.
Yes,
So,
and that's not necessarily a deal breaker. I will say that if we look at your credit and we see that, just like you, I've seen students, come in and they've got a student loan on their credit history, and they've not even made one payment on their student loan,
Right.
and they've already got a 700 credit score. So in that case, they're not just a shoe-in because their score is 700. We still would require a co-signer on that type of deal.
Right.
And on the flip side of that, if someone comes in and all of their loans that they've had in the past that they've paid perfectly, and the only thing negative is a medical collection or another small collection, then we take that into consideration as well.
yep.
Well, speaking of student loans, and I know that in the past there have been other individuals talking about credit scores and things of that nature, so I don't mean to put you on the spot if it's something you don't know, but are you seeing more and more individuals burdened with student debt?
There are a lot. I do see a lot of student loans on credit reports, and the sad part about that is, it can be a help, it can be a booster if they're making their payments on time, but if they're not, it can really hinder their credit.
It's my understanding that if you do not pay or make payments on your student loans, and you are not deferred, that has a tremendous problem, in acquiring anything.
It does, and in fact, where I worked at Loan Central, I helped with tax preparation, and we would have customers come in, and because of their student loans being that delinquent, the government will step in and take your tax return for that too. It not only affects your credit, but they can take your tax return, your refund, and so there's a lot that goes into that. But if you definitely qualify to have them in forbearance, you want to make sure that they are in forbearance.
Sure.
Yep.
And the other thing is that if you were to file a bankruptcy, student loans are not forgiven.
I can't speak to that. I'm
It's
not
my
quite sure about
understanding,
that,
yeah.
but that would be a lot to consider for
Yes.
sure.
Yes.
Okay.
Yep.
Well, going back to the, Pat mentioned it in the opening, talk a little bit about renting versus buying, and maybe some of the benefits of continuing to rent versus buying your house.
So if you rent, then you're paying money every month to someone else for a home that belongs to them. You're never going to own it. So you're just really, in a lot of ways, throwing that money away. You're not going to get it back. It's not being invested. It's not going into an asset that you're going to have. So when you buy, well, you own it. You can do what you like with it. And like you had mentioned before, you're building equity, and your home is your largest asset. In most cases, your home is your largest purchase, but it's also your largest asset. And it's something that you build equity, and you can borrow against, down the road if you need to do that too.
Yep.
So how much money do you really need if, suppose I have my eye on a $50,000 home, and I've been married for 1 year, only working for my business for a year right out of college. How much money would I need to buy this home?
So how much money you need to purchase a home varies upon, how expensive your home is that you're looking to purchase, and also, what mortgage product you're choosing. If you're looking at a rent buster, you might not need anything down.
Okay.
You might just need to have closing costs saved, and money saved for your inspection.
Okay.
But whereas if you do a traditional mortgage, you're looking at probably 20% down.
Okay. So I would need $10,000.
Right,
Yeah,
correct.
on that $50,000.
Plus your closing costs, yes.
Okay.
But you had mentioned earlier that OVB does have different programs such as the Rent Buster and a couple others that can help mitigate that down payment and
Right.
Help get folks started toward the dream of owning a house.
Right. So along with the Rent Buster, we also have 100% financing available on our professionals loan, and that one is geared towards someone who has a 4-year degree. Anyone who has a 4-year degree with good credit history, they could qualify for our professionals loan. And the difference between the professionals loan and the Rent Buster is the Rent Buster is 1.5% of a rate bump added to our normal rate sheets, whereas the professionals loan, there's no rate bump on those. We use just OVB's regular rate sheet for those.
Sure.
Another product we offer is geared toward our physicians, and it's called our physicians loan. And again, it's 100% financing as well, and no rate bump. So
Yeah.
OVB has a lot of options.
It sounds like it.
We can even offer, in some cases, we'll go up to 89% loan to value and then just bump our rate 0.5%. So we really do try to work with our customers and really serve our community and help our customers purchase their homes.
I know that in purchasing a home, through contacting a realtor, let's suppose that you're interested in the house, and so you tend to buy, or not buy, but an agreement. I plan on buying this house. Would it be better for a person to contact the bank first to understand their qualifications?
I think a pre-qualification is the way to go. If you are looking to buy a home, then doing a pre-qualification with a lender is going to put your mind at ease, and it's also going to put the mind of your real estate agent at ease, and also sellers. I know in bigger cities, they won't even talk to you without having a pre-qualification to know what you can afford and what you are pre-qualified for. So definitely would recommend doing a pre-qualification.
And in that process, do you have any tips on trying to find a lender or?
So OVB has a lender at each one of our offices. And the couple of offices that don't have an actual lender, they do have people that can take applications and forward those to a lender. But we also have where you can apply online. So nowadays you can apply just about any way you want.
Right. Okay.
You had mentioned a little bit ago about getting an appraiser or appraisal, or having someone look over the home.
Yes. So on all of our mortgages, we do require an appraisal. That's standard with every mortgage that we have. However, home inspections are only required on our Rent Buster. So what's the difference? The difference is an appraiser is going to look at the property. They're gonna walk through the home. They're gonna look at the land. They're gonna look at the whole picture, and they're going to give a valuation based upon the materials that's used in that home and the condition of the home and some comparable properties around that home. Whereas an inspection is always recommended. Even though we don't require it, we always recommend you do an inspection because that inspection is going to be a little more in-depth than that appraisal. That inspector is going to go through and make sure that all your faucets work and all your receptacles are there and that everything is in working condition. They're going to be a little more thorough than what that appraiser is.
Oh, that's interesting.
And the appraised value is usually, correct me if I'm wrong, but the bank usually uses a comparable method where the appraiser will go out and find sales that are comparable
Correct.
to what you're looking to purchase in that market.
Right.
So that's how the value is determined.
Yes.
Yeah. Yep.
So it's conceivable that the seller is interested in selling a house higher than the value. So let's just suppose it's appraised at $50,000, but the seller wants $65,000.
Okay.
How does the bank handle that?
So it can be handled a couple of ways. So the bank is not going to loan more on a home than what it's worth. So if the seller, will negotiate with the buyer, that happens most frequently in that case. They'll negotiate the price down. And if they won't, then in some cases I've seen sellers pay out of pocket the difference. So.
So we talked about being pre-qualified a little bit ago. And we've thrown the term mortgage payment or the mortgage around. I know there's a lot of other costs that people should consider when they're going into this too, and that's probably taken into consideration when the pre-qualification is done.
Correct.
Can you talk a little bit about what folks should consider other than or maybe start with what the mortgage payment is for those that don't know, and
Okay.
then what other payments you might need such as insurance
Sure.
and things like that.
So included in the mortgage payment is going to be the principal, the interest, and also your taxes and insurance. That's not every case. There are some cases that we're not escrowing. Secondary market doesn't require escrow all the time. So if your payment does not include escrow, you need to definitely plan and budget for your taxes and insurance because they can be larger amounts and larger bills that you have to pay once and twice a year for the taxes. So you want to consider that. You also want to consider if you've been renting, but you're buying a home. There's not going to be a landlord that you can call to come and fix things. You're going to own it. You're going to have to buy appliances. You're going to have to do all of those repairs and things yourself. I also like to tell first-time buyers, just because the bank pre-qualifies you for a certain amount that you can afford, we don't always, in fact, we don't include your utilities. We don't include your groceries, your gas. We don't include any extras that you want to do. If you're a person who, eats out a lot or you want to do lots of entertainment on the weekends, you really need to consider, okay, here's what the bank says I can afford in a payment, but let me go home and compare this to my monthly spending. And is this really what I can afford?
Yeah.
And do I want to change my lifestyle if not? And so there's a lot that goes into it.
And folks could actually do a little bit of this homework ahead of time by determining, okay, let's just say I think I can afford a mortgage payment of $500 with insurance, whatever,
Right.
everything included. Now, then you have to look at just what you said. Okay, my gross income is this, my net income is $2,000 a month, whatever. Then you start deducting out groceries, food,
Right.
childcare, medical bills, cell phone bills, cable, all of the fun stuff, and then that. Because the normal debt to income, I mean, you could look at a 35, 40%.
40% is where
40%,
we
yeah.
like it to be 40% or below.
Okay.
Yes.
Which means, 40 for every dollar you make, 40 cents would be going toward paying debt.
Right.
Yeah.
Correct.
Okay.
That's interesting.
Yep.
So you recommend, Ryan, that individuals should work on a monthly budget, really to understand how much money that they have available.
Well, yeah, I think definitely being prepared
Yeah.
ahead of time, going to
Yes.
talk to the lender is much more beneficial to
Right.
them. It looks better in the lender's eyes as well.
Yes.
So,
I know you're from Ohio Valley Bank, but sometimes first-time lenders really don't know a lot. How do you find a lender? I mean, what do you do?
So, I mean, not speaking on the bank's behalf, but just speaking in general, I would say, if you are working with a real estate agent, they're going to have some recommendations of who they could point you to. Really, a lot of folks nowadays, we do everything on our cell phones, so we can do it online,
Right.
and that's the most convenient for some people to do it that way.
Oh, I see.
But a bank, a finance company, mortgage brokers, you have a lot of options out there.
Should they go to more than one lender?
Well, it is smart to shop around and to see what rates are at different places. It's always good to be educated and know, well, here's the scenario here, but what's the scenario there? And what's going to be best for me and my family.
And is it important to, if you acquire a mortgage from one bank, is it important to do all of your banking at that bank?
I think it's up to you. It's up to the customer. For me, it would be down to convenience. I like everything centrally located at one spot, and I'm partial to Ohio Valley Bank. So, for me, it's a yes. But for other people, it's the bottom line. Who's got the best rate at which time of my life that I'm purchasing something?
right. So we've talked a little bit about the different pieces and definitions of things, but maybe you could walk us through the entire process from maybe making an offer on the house to going to the bank or pre-qualified offer, sitting down and kind of the steps and how long that would take.
Sure.
Yeah.
So when someone calls me and they're interested in a mortgage and getting pre-qualified, what I'm going to tell them is come and see me and bring me your last 2 years tax returns with W-2s. We have to have those W-2s as well. I need your last 2 pay stubs. I need your driver's license, and I'm going to take down your personal information into an application form. I'm also going to need, if you're working with a certain real estate company and agency, you can bring me some of that information. If you know what you're purchasing already, if you've already picked a home, then the purchase contract and also the legal description. Those are all things we need to get the process started for you. And so at that point, once I've gathered all your information and we've taken your application, I am going to send that information to our processing department. And then our processing department, within 3 business days, is going to send out in the mail what we call pre-disclosures. And so it's basically going to have a loan estimate and some other paperwork, just letting you know what you're getting into. If you're doing an ARM product, then it's going to explain to you a little bit about how the rate can adjust and things, and how your payment can increase. Also, we need to know what local attorney you'd like us to use. If you have a preference on a title search, who do you want to do that for you? And if you have no preference, we have our own that we do use. But at that point, the customer is going to receive the pre-disclosures, they're going to look over those, and then they're going to sign them and bring those back to me. You can either mail them back or you can drop them off to me at my office. And at that point...
And those are non-committal.
Right.
That's just
It's just you
a good
saying,
faith.
I want to move forward
Yep.
and see where this goes.
Yep.
So at that point, we're going to go ahead and order the appraisal and the title search. And typically, start to finish, the whole process takes 30 to 45 days to actually purchase the home.
Okay.
So, we are at the mercy of appraisers and attorneys at exactly how long that takes. But we have a general guideline, and it is typically about 30 days. But as soon as we have everything back from the appraiser and also the attorney, then we'll set a closing.
Yep.
And then you get ready to sign.
And all of those things you just mentioned are basically the closing costs. The title
Yes.
search, the appraisal. So that's when we mention the closing costs, all those go into it. So, that can be expected to be money out of pocket for the buyer.
Right. Out of pocket up front, you're going to be looking at the appraisal fee. It's $560, and that's charged to your credit or debit card. Prior to closing, you're also going to be asked to purchase a homeowner's insurance policy that, for the first year of your home ownership. And so those are both out-of-pocket costs that I always like to let my customers know up front. Closing costs, the rest of our closing costs are collected at closing, and can sometimes be financed depending upon appraisal value and things like that.
Sure.
I can't say enough about title searches. When we were buying our one piece of property, the title search found that about 20 years ago, somehow the property was moved to another person's name, and in essence, that original individual could have come back after we made all the payments on that house and said, "Hey, it's my house." And
Wow.
I found out from the legal individuals that we would have to vacate the property.
Wow.
So title searches are extremely important.
Very important, that's right. Yes, and sometimes we'll get title searches back, and they'll also have any kind of judgments that are against
Yes.
the owners. And so there's all types of things that you can run into. And those sort of things, if you run into them, can take a little bit longer to get to closing as well.
Right.
Right.
And tax liens, those do become, for instance, you purchase another person's property, you also purchase their tax liens in some cases. And if, so again, I can't say enough about title searches because there's a lot of individuals that can't understand why they have to pay $300, $500 for a title search. And they are well worth the
Yes.
amount that you're sending.
That's exactly right. I agree with you.
Well, Kathy, this half hour has flown by. I can't believe we're almost out of time. Is there anything that we haven't touched on that you think is important to get out?
I would just say that the takeaway for me for a first-time home buyer would be to work with a knowledgeable lender, work with a knowledgeable real estate agent. If you are purchasing a property that it's for sale by owner and there is no real estate agent, I would just say definitely have a very knowledgeable lender to work with. We'll walk you every step of the way, and don't be overwhelmed or intimidated by the process. It's really, really an easier process if you have someone who knows how to do it with you.
All right. Well, thanks, Kathy. This has all been great information. I've
I very
learned
much
a lot.
appreciate it.
And,
Yep.
Yeah,
Thank
it's been
you.
awesome.
Thank
Thanks
you,
for
guys.
coming on. Yeah.
Hey, for Brad Bapst, Ryan Mapes, myself, I want to thank you for listening to OVB, Ohio Valley Bank Common Sense.